What do you do with sterling right now?
Yeah, it seems like what people are still doing is they're still buying it. I think what we have with sterling, it's an investable risk at this point. There are different probabilities, there are different outcomes, but I think what people are looking at is a potential for a remain or a soft Brexit or a kick the can down the road, are all factors that are greatly outweighing a hard Brexit. So what I think you're starting to see is especially the real money community, they're starting to dip their toes back into UK assets. They're buying UK equities. And I think as we get closer to like the 135 level, this is when that community will start removing the hedges, which reinforces some of the upside.
Interesting take that the new money is kind of coming in. And if you come inside the Bloomberg, want to take a look at sterling forecast, continues to be revised upwards. We're right now sitting on that forecast for the first quarter of 2019. That's the blue line at 131. The purple line is 137. Does that purple line need to be revised up? Basically, the estimates for the fourth quarter now.
Yeah, I think right now what the market's trying to figure out is a theme around Brexit and European risks in general. And so what you're kind of seeing as there's more momentum in the price action, it seems like that's kind of leading the forecast. And so I think, again, as we kind of get around some kind of investable risk around Brexit, and especially a kick the can down this road scenario, we could kind of start looking at sterling as an asset that's not entirely driven by Brexit risk, but it's also driven by bigger factors, whether it be European growth and a general outlook for the U.S. dollar.
For an investor, does it matter how far the can is getting kicked down the road? That is to say, whether it's a short-term tactical delay, 60, 90 days, as opposed to the 21 months the EU has suggested?
Yeah, I think it matters insofar of the way that they kind of want to present those risks. But I think in the very short run, any kind of delay is really good because what I think most people want to have is a way to assess whether or not there's a hard Brexit. And so if you could remove the binary risks of staying or leaving, the time frame for any kind of extension is really going to reinforce the rally that we see in the very short run. But if it becomes a 20-month or a 2-year kind of deal, people start thinking this is kind of a very gentle way of just kind of easing through the status quo, and that there may kind of just end up with some kind of very soft version of Brexit the longer it gets delayed. So I think the longer it gets delayed, the more bullish it becomes for sterling.
Mark, we just heard there are two different votes that might happen in Parliament. One is to take no deal off the table. That is, they will not exit without a deal. The other is to delay. From what you just said, does it follow that the markets are more concerned with taking that no deal off the table, that would have more of an effect?
Absolutely. I think it's all about reducing tail risk. So again, it comes back to, are these investable risks? The biggest thing I think market participants have dealt with is the uncertainty around investing, especially around political outcomes. So uncertainty in itself it equates to volatility, but volatility is good, uncertainty is bad. So I think what we have is, if we have some kind of framework where we could think around tail risk being removed, that allows people to take investable risks. And so I think that's really important, especially for something like sterling, which across every measure that we look at is a currency that is deeply held short. So there's room here that momentum builds on momentum. So,
Mark, also there's the other fundamental part, which is you had Mark Carney when he was testifying said, look, the BOE is going to provide all the stimulus it can if it needs it. Is there a narrative in the market that if things are okay, that the BOE is going to have to get in there and start hiking with wages still rising?
Yep, I think that's another important point, and I think this is why it reinforces kind of a positive European trade in general. What do you think about Norway, Sweden, even the euro? I think there's this kind of overhang of uncertainty that clouds kind of the policy outlook, especially for the ECB and the Bank of England. So if you kind of remove some of the stain from Brexit, it gives the Bank of England a little bit more confidence to do a little bit more. I think those risks and those uncertainties kind of being subsiding a little bit offers the ECB a little bit of element where they have more certainty. If you think about what central banks have been saying the last 2 weeks, every central bank has used the word uncertainty, whether it's a link to China, whether it's a link to Brexit, whether it's a link to European political risks or trade. The key theme from central banks is uncertainty. So the more you remove uncertainty, the more they can do the fundamental stuff, which is continuing to normalize policy in a very gradual manner.